Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb, and today it is my absolute pleasure to welcome back onto the show after a brief hiatus, Richard Leader from FastFin. How are you?
Great to be back, Toby.
Listen, it's been a while. I know we've seen and spoken to each other since, and all this. And first time actually in person, as we've discussed before.
Yeah, you're a lot taller than
and you're in the UK because you were in the US last. Or you same. We can both echo those. You're not a short man, are you?
We can be mutually complimentary in that regard.
Exactly.
I was sat in my apartment in Boston, having just moved up from New York. Sat in front of my Boston brick wall in the background, and during COVID, in that weirdness, but it's great to be actually back in an office doing these things in the way that we're meant to.
And back in the UK, although heading back out to the States, we'll come on to that in a minute. There's a little teaser and spoiler alert for everyone there. But
that can be a spoiler to the IRS.
Yeah, exactly. But lots happening with you and FastFin and the business, and many things have moved on over the course of the last couple of years. I've loved hearing about it. I've had a sneak peek and been excited and titillated by it already. But for those who missed the first episode, and I loved it, it was a really good conversation, really enjoyed that chat as well. But those who've missed the first one, tell us a little bit about yourself, tell us a little about what you're doing at FastFin, the story so far.
Yeah, first of all, Toby, thanks a lot for having me back. It's great to be on FinTech Focus TV again. Thanks for the interest in FastFin and what I was doing before. When I last had the pleasure of speaking with you, and kudos for all the fantastic community content that you guys produce. I think you guys are head and shoulders leaders in your field.
This is why you're back.
Brilliant. And so when we last spoke, I was with my first FX startup, FX Hedge Pool, which I started with my two co-founders in New York back in 2019. I think we would have spoken in 2021 because it was during COVID, and by that point, Hedge Pool had been live for a good year and a bit. We did our first revenue trades in January 2020. We got those in literally just seconds before COVID struck, which was
the timing's everything sometimes.
It was a good stroke of fortune. I stayed with Hedge Pool until 2022, May 2022, when I moved back to London, I had a fantastic 3 years helping to get that business from zero up to the point at which it could be handed over and given to a team of actual professionals to run, which is my interest in life is very much in starting things, attacking a problem, just making progress towards building something, and then when it gets to a point when it's up and running and the patterns are all set and the processes are all in place, then that seems like the ideal point to
stay right.
Exactly, yeah. onto the next thing, which is very much I hope where we're headed at the moment.
Absolutely, and it sounds really interesting. So you gave me a bit of an insight into the plan and what FastFin's doing, and lots of interesting stuff about that. So give us a précis of that business.
Happy to do so. My co-founder at Hedge Pool, Emin Tartosian, and I had actually been working together since much earlier. We'd been working together since 2008 when we worked here in London for a fantastic pioneer called Paul Kaplan, who back in 2008 was beating a very lonely drum of trying to convince everyone that the web was about to become a major thing in financial markets.
Another good time to start as well, wasn't it?
Wasn't it great? I think everyone thought he was a little bit sort of obsessed with the idea initially, but eventually it gained traction, and lo and behold, he was proved absolutely right. So he was a bit of a Steve Jobs character in that regard of predicting exactly where the hockey puck is going to go to. And it was there that I started working with Emin Tartosian. And back in 2010, Paul basically said, hey, why don't you guys go and open a New York office? And I think I was about 29 by that point, and I thought, hell yeah. So off we went to New York, onboarded a ton of clients for Kaplan over there. And as great as Kaplan was, it was actually the best firm I've ever worked at, because I haven't worked at any other firm since. As great as Kaplan was, we both got the entrepreneurial itch, I want to say. It sounds horrible, but we both started to think, okay, we want to be entrepreneurs. So we kicked off FastFin in 2014.
Isn't it interesting? Sorry to cut you off on that, but it's interesting how companies that come from that entrepreneurial founder type, like Kaplan, spout and create other founders there afterwards. So I always think about it with what Lance Ugler did over at IHS Markit, and how many successful entrepreneurs have come out of that stable. And I think it's again something there which obviously you've had similar sort of stories with.
That's music to my ears, and I think that one of the wonderful things about working for a boss, as I did then, who appreciates that, is they don't want to kind of keep you nailed to the ground. They kind of want to they want to kind of cultivate you and set you free. And in our own sort of humble way, that's something that Emin and I always wanted to cultivate on among the people that we were honoured to bring onto our own team once we started hiring people. One of our people who we brought into one of the ventures himself went off to, he was down at South by Southwest recently, just hosting panels on his new AI startup, and it's wonderful to then see the people you've kind of helped along the way to go and do it for themselves. I just hope he in particular remembers me when he's a multi-billionaire.
I'm sure he will. Be in the memoirs.
Exactly. I very much hope to get at least a footnote. So, but you're absolutely right. It was great to work with entrepreneurs. It's right that you should mention Lance and Shane and the other guys over at Market, later IHS Markit, now S&P, etc., etc. Those guys have always been a bit of a beacon on my kind of radar. There was a time when I briefly considered going to work for them. They're a great British success story as well.
Absolutely,
it's good that we've got some Leviathan
people to aim for. Absolutely,
couldn't agree more.
And so I cut across you then, which is very rude of me, but I was interested in it from just that sort of story. So then, give me a little bit more of the evolution of FastFin.
Yeah, happy to do so. So FastFin was always a consultancy, but our USP was really that we understood the capital markets. The idea was that they would engage us, and they wouldn't engage us with zero knowledge. They would engage us already with a significant, we hope, amount of knowledge about whatever silo within the capital markets they wanted us to work on. So if they wanted us to work on a project involving FX swaps, interest rate swaps, securities lending, currency overlay, equities, equity derivatives, you name it, we'd be able to pretty much go and hit the ground running. Now, not to for 1 second rubbish the competition, particularly those are the stratospheric big four consultancies, but what will often happen when you engage one of those mega firms, and you probably know the forum I'm talking about, is they will start a project with a whole football team of people, and for the first however long of that project, you'll largely be paying.
It's gradual attrition, isn't it?
Yeah, kind of. Yeah, and you'll also be paying to kind of train them up.
Yeah.
Whereas what we found with FastFin was there was a huge demand for people who can arrive and be productive from day one. That we wouldn't need to be told what an interest rate swap is. That
specialisation is incredibly significant, isn't it? I think that I think consultancy will have this sort of more and more boutique feel to it as it moves further forward. Those Leviathans, have the safety aspect of in the similar sort of thing. No one ever got fired for hiring IBM, as the famous old saying goes. But I don't think they're particularly the issue when you look at it with the four that the big four that you're talking about. But I think if you're looking at specific issues and you're looking at expertise and a wealth and depth of expertise, I think that sort of makes a lot of sense these days, doesn't it?
I think you're absolutely right, because if you guys I'm sure experience exactly the same as well, given that you guys have carved yourself out a really commendable niche as specialists in fintech recruitment. When you approach a client, not having to start from zero, but when you actually know the kind of the trends, the opportunities that are that presented to them in their market, then you can be a lot more helpful from day one. And with FastFin, we found that we developed a nicely successful business model by going and delivering what we think is real client value by hitting the ground quickly on these innovation projects. And typically the projects would be very, very short sprints, lasting say 8 weeks. We'd take an idea in, and the idea would typically come from a senior person in the capital markets who ironically would have an IT team of maybe 200 indirectly at his or her disposal. But bizarrely would find it very difficult to mobilize even a small amount of resource to do a speculative innovation project. So we would find that these individuals who commonly had job titles such as head of FX or in some cases head of capital markets, they would come to us and say, hey guys, I've got a great idea. And sometimes they'd just grab a piece of paper from the printer or, metaphorically write it on the back of a cigarette packet.
Yeah.
And they would say, look, can you guys build that? And we'd be able to say as FastFin, yep, we get exactly what you want to do. We'll see you in 8 weeks with a working prototype. And this was and remains like catnip to these individuals. So Hedgepool was a fantastic side journey on that, where we basically downed tools in order to start Hedgepool, and I was honoured to be part of that, and a huge amount of respect for my co-founders there and the work that they're still doing, and the fantastic team that we hired, all of whom are fantastic people. We were lucky enough to have hired a couple people from FXall, LSEG now, and so we built up an amazing team of people, and those guys are running that business fantastically. But for me, the opportunity cost of going and becoming a chief operating officer for a few years was that I missed doing the innovation projects. And it's a case when starting a startup, and I don't have infinite expertise in this regard, but all my wisdom from having done so once is that one has to have a self-aware sense of one's own aptitudes and limits. And just because
which I don't think is common, right? I think there's a lot of people there who, particularly in the startup world, and particularly in technology, I think you see a lot of people in technology who absolutely, they're wonderfully passionate about their product, and they're wonderfully militant about that product and why it's needed, and they think they can be the best people to sell that. So quite often you see this friction between founder and then sales team underneath it, or product team, et cetera, who become this all-encompassing, deity to the entire business, and it's very difficult to scale a business further forward on that. And I think actually what you just said there is, to me, fundamental to the success of a startup, when you have self-aware leaders who know what they're good at and what they're not good at, and know when to bring people. You mentioned it a couple of times already, which is music to my ears, which is about bringing the right people in to be able to do that. You mentioned very graciously the team that you had over there. You mentioned the team when you were talking about Kaplan. That selection of the right people, I think, is fundamental to the success and failure of businesses. Obviously, that's my job. But alongside that, I think having a leadership team at the start of a startup who know where their strengths lie and know what they need to bring in, and then actually critically let those people do their job, that becomes a massive, I think, creator of success.
I completely agree, Toby, and I think that's a very enlightened way of putting it, and which comes as no surprise given the work that you guys very successfully do, helping companies to grow, not just from 0 to 20 people, which is what Hedgepool did while I was on the front line, but also from 20 up to 100 and etc.
There's lots of different phases, right, in those stories, but they all remain the same about bringing things through and right people.
Extremely different. I couldn't agree more. And it's kind of, to use the old cliche, it's horses for courses, the skills required to launch and start an idea are very, very different to the ones needed to operate it through the various phases of its growth. I mean, running a sort of small company is very different to running a company once you've got a few hundred people on payroll, and the two could not be more different, I would imagine. And I think it's a case of being self-aware enough to know where one is really, really productive and effective. I think what founders sometimes try to do is they sometimes think that just because they were the one who hung the sign above the door and got it from 0 to to 10 million of revenue or whatever, they think that they're the ones to grow it ad infinitum. And I think it's very important to know basically when to stop and when to hand over. But that said, it's a thrilling journey. I can understand why people want to stick with it. There's a bit of pride involved. I'll happily confess to yourself, Toby, and the privacy of your 500,000 viewers. There is a bit of pride involved, and when the time comes to step back, you do think, oh, hang on a minute, hang on, I could really do this, but once the dust settles a bit, and once you actually realise, look, you know, what my passion is doing the sort of fast, steep bit of the curve.
Yeah.
It's not necessarily in in running an organisation. That will come, but maybe later, maybe a different thing.
Yeah.
It's having the self-awareness just to say, look.
Well, I think when you look at what you're doing within all of this right now, it gives you the opportunity to have the best of all worlds, doesn't it? So this consulting piece allows you to go in there and build that. You're still building a excitingly paced, growth plan. We were talking off record about, where it's heading and what you're doing, and there's a lot of good stuff that comes out of that. But also in the same sort of way that, Hedgepool came out of there, there's a lot of opportunities to, to sort of incubate and to create and to build those sort of businesses as well, which is the exciting part of the plan, I guess.
Absolutely, Toby, and thanks for drawing attention to that. It's no secret, because it's on our website, that we're an innovation lab and incubator.
Yeah.
We very much want to press copy paste on the Hedgepool model. Not directly compete with Hedgepool.
Yeah.
That would be highly illogical, hugely illogical. But basically to press copy paste on the generic model.
Yeah.
Just in case Jay's listening, the generic model, which is to basically take an idea, prototype it, get it to a point where we can demo it to clients. Get them really excited, get them sort of interested to the point where they say, look, build that and we'll sign up to it.
Yeah.
Build it, go live with it, run it in a production environment and scale it. And typically when companies, particularly startups, try to do this, they often don't have a technical founder. They'll go and raise some money or maybe self-fund. They'll spend a bunch of money on developers. Quite often that results in them hiring people who maybe aren't necessarily the right developers for the role. They'll burn through a bunch of cash, sometimes measured in multiples of millions, just getting to an MVP. Whereas the offering that FastFin can deliver is that we've got the tech resource. We can actually take the idea from zero to prototype to minimum viable product in a very, very compressed timescale. We can probably compress what would ordinarily take a self-formed development team 12 months to do. We can compress that through our proven methodology to about 16 or 24 weeks, so we can get it done in a fraction of the time. And what we've also done is we've also incorporated a bunch of the other skills necessary to navigate the fintech maze, so regulatory registration, dealing with investors, the whole maze of things that needs to be done, even boring stuff like, I shouldn't say boring stuff.
I know exactly what you mean by it. So I think it is the right wording, right?
All the stuff around the edge, all the way down to HR and finance, and engaging lawyers, engaging financial advisors, accountants, filing taxes.
It's the same as a software business, right? This is about looking at a process that's complicated and painful for people and removing the friction from it, which is effectively what you're doing. And I think, this is fascinating for me, because there is an incredible, just in businesses everywhere, right? There's an incredible failure ratio of businesses in their first 3 to 5 years. We know this. There's an incredible failure ratio, and seeing how many people have this great idea and lose fortunes and their houses and everything on this in the first year of running a business. People who are bright, people who wanted to take a chance, people who are entrepreneurial and give things a go. And usually there's things there, the snags that are just the simple things that you've spoken about there, thinking, underestimating the cost of what might have been involved in it, looking at having to go all the way through the pain of what you've just talked about in terms of regulation and setups, etc., that stops them from running in the right sort of direction, even in terms of procurement and getting past procurement teams if you're working with investment banks and all this sort of stuff. So I've always been a big fan of this sort of almost franchise model, where you've got the opportunity to work with other people to have those sort of things in place and to allow and incubate. I was at a major bank's innovation lab earlier on today, and I'm a big believer in people working collaboratively to help work together rather than run alone. And I think that what I love about what you guys are doing is the collaboration, which allows the speed, which allows the competitive advantage, and reduces the risk. And it might mean a sort of slight touch on upside on that and sharing the wealth, etc. But so many people who are going through seed journeys, through Series A journeys, who are going into it without knowing about things, and first-time entrepreneurs, etc. It's not just a financial risk; it's a massive amount of strain and stress that these people go through going into the unknown, and having effectively the Sherpa with them who can go on that sort of journey makes it really makes it, I can see 100% the benefit for you guys in this, but also for the benefit in the people you're partnering with and the ecosystem as a whole. It's really exciting.
Well, you put that incredibly thoughtfully, Toby, and clearly a lot of what you said is born out of personal experience of growing a successful firm as you have done, and I wholly agree with a lot of it. Much of it is very generic to running any type of business. You typically have to do the same things. Now, of course, if you're running a technology business in a regulated zone, and we've set up or worked on establishing other startups since Hedgepool as well that have been in even more regulated domains, and it is a question of having the skills to navigate these processes. But you touch on a lot more besides. You've got the whole sort of soft skills which an entrepreneur has to do, and often the entrepreneur is learning it for the first time as they go along.
Exactly, yeah.
And it's a very, very high stakes, particularly when, as you say, people have typically given up a job, they've possibly remortgaged, they've possibly drawn down a whole bunch of savings.
Yeah.
That's not a training opportunity. That's like the England football team using penalties in the World Cup semi-final as a training opportunity.
Exactly.
You really have to know the way. So what we've liked to do, or enjoyed greatly doing with FastFin, is as you say, very generously say thank you, Sherpering people, and hopefully nobody dies on the way up to the top of Everest, and we'll leave them up there. No, just kidding. But yeah, we kind of know the way, and you're absolutely right. It's bringing partners in because there's only so much time in the day.
Yeah.
And so we love having a big network of people who we're either working with, who we're aspiring to work with, people just with a good kind of who are production lines of ideas. And even if the time now in March 2024 isn't right for them to say, hey, let's do something, maybe it'll be right in fourth quarter 2024, 2025, 2027.
Yeah, and that's exactly the way that a number of VCs work. It's a number of way that, but it's constant. Let's look at the right time and keep talking to people and keep working through this, and it has to be the right time for people, and it's that timing is probably one of the key parts of all this sort of business.
Yeah.
I'm really interested. Actually, you mentioned something there that sort of reminded me of something we were discussing at dinner last night. You mentioned there about the empathetic side of leadership that sort of comes into this, and people learning, first-time entrepreneurs effectively sometimes learning how to run teams and manage for the first time and build businesses. I was with a very self-aware guy who's been super successful in what he does, and he talks about how for most of his younger years building this business he was very angry, and he was very angry because he put loads of pressure on himself, and he didn't want to think that they were where they wanted to be despite having incredible results and growing this incredibly impressive business. He used to bark that out at people around him, and they used to feel the pressure that came through from him of his sort of self-standards that he was pushing onto those people. And he had this CFO quit, and he took him out for a drink and tried to sort of turn him around and was talking about it. He goes, this will keep happening unless you sort this out. And he didn't turn him round, but it sort of was the penny that dropped in his head at that sort of stage to say, if you keep doing this, this is going to keep on happening until you learn from it. And it was his ability then to change that allowed him to much greater success over the next couple of years. And I think that's incredibly important. And whether you've got it through NEDs or through what you're able to do, or through the right VC partner or through the right business partners, it can be quite a lonely pathway sometimes you're doing unless you're taking and listening to that sort of advice.
That's a great point, Toby, and it aligns very closely with my own experiences in that regard. If you're doing it solo, then you really don't have anyone to validate or refute what you're doing.
Yeah.
And I've been aware of entrepreneurs who've become incredibly successful and have drawn the lesson from that's because of everything that they did, and it validates everything, good, bad, or atrocious. And I think a much more enriching learning experience is when you've got a team of co-founders or peers, and some NEDs, some advisory board members as well, and just other people who don't work for you, but they're just there to keep you on the straight and narrow, and they can just be candid with you because you can't, they're peers. I think that's a wonderful learning experience. It really is, and certainly my experience at Hedgepool and other ventures that we've worked on as well. I find that it's very much the case of the who you align yourself with.
Yeah.
And again, I can see that the sort of solo loneliness of command journey will be less of a learning, fruitful one.
Yeah.
If you surround yourself with the right people, and then it talks to your point, Toby, earlier on about building the right team.
Yeah.
I'm a great believer in one's own limited capabilities, and I think it was Andrew Carnegie, the steel magnate, who said that within any of his organizations he'd have very little difficulty finding someone who was better at a particular task than he was, which is the reason why he employed
And do you know
them.
what? That's so important that people are able to do that and to have the courage to do that. Particularly, I think founders, it's a lot easier to do that sometimes. But I think when you've got a management team who are tasked with finding people that are better than them, that's a brave move. And it can be quite quite counterintuitive sometimes in people's thought processes. So let's say I'm a CTO and I hire this incredible head of engineering, for example, to report into me, and they're better than I am. Actually, I think they miss the point that that's the whole idea. And their stock rises because of that sort of thing, rather than threatening their sort of opportunity and their job. And I think when you can surround people there who are hell-bent on hiring better than them, and having that sort of mentality, I think the world changes very quickly from that.
Yeah, I couldn't agree more, and that was one of the big kind of growing lessons that I've taken, both observing within Hedgepool and again elsewhere. If I say elsewhere, I can be a bit more specific. But yeah, it's all about hiring the right people, particularly sales teams. They are the lifeblood of the organisation.
Yeah.
I've got an immense amount of respect for anyone in sales. It helps that I worked in sales before, of course. But it's upon the shoulders of salespeople that an organisation will either succeed or flounder.
Well, this is very interesting again, because it's a conversation we have a lot, and I think again going back to seed, Series A, Series B, a lot of that goes into the hiring of sales teams, and even the first CRO hire that you get, and I'm amazed at the longevity of a CRO and how short it is. I'm amazed at the volatility of those first go-to-market sales hires that people get in, and how often it gets wrong. And I think it's because so often it's like, I've got my money, let's make the hire and let's go on a process, as opposed to saying, right, let's really look at what we're looking for. Let's not look for the CRO who's taken a business from 50 to 100 million pounds. Let's look at the people who've gone on that journey from 10 to 50 or whatever it may be, recurring revenue, and make the hires that makes sense, as opposed to the glamorous hires at the top. And I think that needs a lot of coaching still for people who are going through that sort of journey. And I guess that's again the experience that you've got, particularly having come from that sales background, that you're able to look at that and make better decisions and better hires, because I still think the hardest job in the world is hiring salespeople.
Yeah, I totally agree, and often salespeople, the best performing ones,
of course,
are the last people you want to promote to sales management, because you want them to be out selling. They're your foot soldiers. You don't want them back, in the rear in an office in staff HQ.
And they're also unfortunately the worst people to interview, because they're salespeople, so they know how to win you in the room, right?
Well, exactly, as the saying goes, if salespeople could sell to customers as well as they can sell to their managers, then everyone would be smashing their targets. But no, huge amount of respect. And also you touched upon funding as well. That's something that every founder should be cognizant of. One shouldn't leave it until it's necessary, because it's all consuming. For a founding team, everything else stops while a funding round is happening.
Yeah.
You can outsource bits of it, making the initial intros to people. You can outsource bits of it, but the real meat of it, the preparation of pitch deck materials, the going out and pitching, that is stuff that has to be done. Only a founding team can do that. Really, with a lot of startups, I mean, we were, in the various ones that I've been involved in, we've been fortunate enough to be revenue positive, but for high burn rate startups, which I haven't been involved in any, I'm glad to say, but the role of fundraising becomes a permanent one. Yeah. The CEO is always fundraising.
And someone said to me recently that they've I can't remember the exact terminology, but it's effectively they were hostage to the fundraise at that sort of stage. So my life isn't my own at the moment, isn't it? And I mentioned, I think,
particularly in the low interest rate environment, where we were seeing ridiculous amounts of VC activity. We had firms in our space who I go on Crunchbase now, and I think, blimey, they have raised 200 million that's going to take a lot of paying back. Because, you know, of course, the investors, they want it back with a huge risk premium as well. And you've got to wonder sometimes about some of these business models. Clearly, they can see things that I can't. But sometimes it feels like a bit of an escalator, a bit of a sort of a case of, all right, now we're burning, you know, 10 million a year. Now we have to go, you know, up that 10 million a quarter or whatever. Now we have to do a 40 million raise. And
it's a spiral. It's and you know, there's companies that navigate that brilliantly and do fantastically well, but you know, there's a lot there that get that wrong, and particularly when they're trying to go through that thing and raise that sort of money based with the wrong people. And it comes back to that people piece again, right? If you're sat there and you're jumping in because you need the cash, as opposed to it's a strategic partner that's going to help you get to your objectives and share the cash, and you're both aligned to where you want to go. That to me becomes incredibly important. Well,
actually, on that point, Toby, and that's a nice sort of place to round off from my side anyway. And I'm not just saying this because I'm sat with you as your guest here in your fantastic studio. But you know, in retrospect, one of the things I wish I'd argued more sort of vociferously for in my various firms is being a bit less frugal when it comes to engaging people who can massively take the burden of the initial selection off our plates. There's nothing more important than hiring the right people. You can't just cast the net as far as your own individual network of contacts goes. I'm absolutely a supporter of spending good money to achieve good results.
Do you know what? I had someone in here recently who's is a first-time founding failure story. And he's on his second one at the moment that is an unbelievably big success, raised well over 100 million pounds, going from strength to strength, literally millions of customers, and it's a B2C business in the car insurance space. He was in the show, sat in the seat, and I was amazed at his sort of story, but it's a 29-person business, and those 29 people, one of the things he said was he invested in, you know, he said sort of cheap people was an absolute false economy, or worse, that he said it much better than I just did. But I think that's a really important part of it there, to surround yourself with the best people. It goes back to what you're saying about hiring better than yourself and creating that sort of journey. So look, it sounds like you got the plans, it sounds like you got the war wounds. It's a really exciting journey of where you're heading. I know you're heading back to the US later this year and sort of taking it out and taking on the Americas again, which is an enormous opportunity. We've been talking about that beforehand. I'm out there next week. Can't wait to get back out there. There's so much stuff happening in the USA at the moment. But let's just finish with a sort of précis of what's next for FastFin. What can we expect to see? What's exciting? And how do people get in touch with you to find out more?
Well, hugely appreciate the opportunity to do so. We're focused on delivering value for our clients. Our clients are sell-side banks, they're venues, exchanges, platforms, and institutional fintech vendors. We love working with all these types of people. That's what gets us collectively out of bed every morning. We've got people in all time zones now. We're in 3 regions. We very much hope to be ramping up the teams both in London and New York, and probably getting the Asia flag planted as well. So we're focused on delivering great value to our clients, and any good opportunities that come along while we're out there. Because just as with Archimedes, you often have a sort of flash of brilliance when you're meant to be doing something else. Then we're going to have the teams to be able to stand those up. So if one of the founders has an idea to say, hey, we're going to start up a fantastic insurance platform, probably won't steal your friend's idea. That'd be horrible. But you know what I mean. So yeah, we just want to.
We've got some catching to do with him, I can tell you.
Fantastic. Well, thanks ever so much, Toby, for having me on again. It's lovely to sit here with you in person.
No, I've loved every minute of it, and it's as I said, genuinely, the last time we did this, I learnt loads, and it was a great conversation. This one even more so, if I can say that. And it's always a pleasure having the show. I wish you the very, very best of luck.
Fantastic, Toby. Thanks a lot.
Great to see you. Good luck with the move. I'm sure I'll see you before then anyway. We've got some a couple of things to follow up on anyway, so we'll do that, and I'll see you soon. Thanks for coming on the show.
Thanks. I really appreciate you having me.
And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.